Okay, I'm gonna expand. Says we're live. All right. Hi, everyone. My name is Nikki Wetzel. I am the Director of Communications and Advancement here at Prosperity Connection. We are a local St. Louis nonprofit that helps St. Louisans through our financial education and coaching build confidence, knowledge, and skills to reach their financial goals and enhance your financial well-being. And I am here with our lead financial coach, Ben Feimer. Today we are going to be busting some common myths about the home buying process. Home buying is a really common financial goal that we hear a lot from our clients, and we know there's a lot of information, a lot of misinformation, a lot of questions out there about the home buying process in general. So we thought we would just talk about some of the things that we hear. If you happen to join us, we'd love for you to toss some questions in the chat. I'm going to open with asking Ben a few questions that we hear a lot, and then I'll look to the comments to see if anybody has any questions that they would like answered. So let's get started. Ben, one of the most common things that we hear is about credit scores.
Yeah.
So what credit score do I need in order to buy a home?
That's a really good question. And like you said, like that we hear that all the time when it comes to home buying. And the truth is that you can actually get a home loan, like a mortgage loan, with a pretty relatively low credit score.
Okay.
You could get one at honestly like 550
Oh, wow.
FICO score, but you probably don't want that loan.
Okay, fair enough.
I'm sure the people watching know that the mortgage industry right now and just like home buying at this moment in time is pretty crazy overall. And so if we're in a position where we want to purchase a home or we're looking to get a mortgage, we want to try to get our credit score as high as possible, but you can get a mortgage with a relatively low score. You don't
Okay.
need a 700
Okay.
to get a mortgage loan. Generally in like the St. Louis area, I would say in this marketplace, probably like a 620 to a 640 is like the beginning stages of where like most mortgage lenders are willing to work.
Okay.
But there's all sorts of other extenuating circumstances as well.
Okay, perfect. What about the idea of a 700? Like once I get to a 700, am I guaranteed a mortgage loan?
Absolutely not.
Okay.
So 700 is a really great goal to work towards. And I honestly think like we've seen all the commercials and all the marketing around like getting your score to 700. I honestly think that that's a marketing tool. That's just
Okay.
like a really easy number to focus on.
Yeah.
A 700 is a great score. For those of you that don't know, like your credit scores actually range from 350 to 300 to 850. So there's actually quite a large range.
Okay.
Having a 700 is an amazing goal to shoot for.
Yeah.
Having a 750 is even better. 775, closer to 800. But again, you can absolutely get a very decent mortgage at a 620 to a 640 range.
Okay, great. So something to shoot for. Awesome. All right, one of the other big questions that we get is about affordability.
Yeah.
And how the heck do I know what I can afford when it comes to buying a home?
Yeah, so I mean that's really tough, and like we're busting this right now, and that's what this is all about. But every time somebody purchases a home, it's a completely separate deal from somebody else because they've got all sorts of other things going on, right?
Yeah.
A big part of the home process and being approved for a mortgage is one, is your credit in a good space? Like what does your payment history look like and that kind of stuff. But two, what does your debt to income ratio look like?
Okay,
And
can you talk, what is that?
yeah, so your debt to income ratio or like if you guys are talking with a mortgage officer or a lender or even like your realtor or something like that, they're going to say the words DTI quite a bit.
Okay.
So DTI stands for debt to income. And what that really means is like how much are you bringing in each month in income? And it could be from all sorts of different sources. Could be a pension, could be Social Security, could be just like your regular W-2 job, or if you have your own business, that kind of income as well. So that's your income part of the debt to income ratio. The other part is the debt. So how much of your monthly income is going towards repaying different things? And so most mortgage officers and lenders and banks look at, okay, so and so is bringing, John Smith is bringing in $2,000 a month in income from various sources, whatever they are. and that's a pretty regular $2,000. How much of that 2,000 is going towards paying off bills or
Gotcha.
paying off like other obligations? And that could be your utilities, that could be your current rent, that could be what your Netflix bill, like car bills, like all sorts of that kind of stuff. So a lot of mortgage officers want to see what does your debt to income ratio look like? How much of your income is going towards other things? And that means how much house you can afford, right? And so when we're looking in that and talking with mortgage officers, they say, okay, great, you've got an 850 credit score. It's perfect credit, but based on your income, I can't approve you for more than like $100,000 house,
Gotcha.
right? And that leads into a whole other situation of what you get approved for versus what you can afford,
Yeah.
right?
Yeah.
So, any questions about that?
Well, one thing that I can think of is this concept of like a 20% down payment. That's
Yeah.
really intimidating. Do
Yes.
I have to have that? Because that can affect how much I can afford.
Yes. So that's something that I hear all the time. It's like, oh, I don't have enough money saved up. And we, like, clients buy houses and get mortgages and move into a home. There are programs out there, especially in like the St. Louis area,
Okay.
where you can put like zero money down.
Wow.
And I'm
Zero?
sure zero. Now, again, this isn't like a marketing commercial or anything like that. I just want you guys to know that that is an option. But it depends on what it is that you qualify for. So a big portion, so a traditional home loan, traditional 30-year mortgage, we're looking at 20% down more often than not
Okay.
because a bank wants to see that like you're invested in this purchase as well.
Yeah.
And with a 30-year mortgage and a 20% down payment, generally you're going to have a more favorable interest rate. And we can talk about interest rates a little bit later. But there are other programs out there like FHA. I don't know if you've heard of that before.
Is that
Some
for
of the
first time home buyers?
yeah, first
Okay.
time FHA is first time home buyers. And typically a lot of people can get away with putting down like 3.5%
Oh,
for an
okay.
FHA loan versus the traditional 20.
Yeah.
And so if somebody's buying a $100,000 house, we don't need to put 20 grand down. We can put 3.5
Okay.
grand down. And that's not a small amount of money either
Yeah.
though. But with FHA, if you qualify for an FHA loan and there are income limits and all sorts of other stuff, as well as you don't necessarily have to have this be your first house that you bought, but there's a bunch of qualifying factors for FHA, and that's something that we could talk about at a later date. But there are programs that can cover that 3.5%. There are grants available. There's all sorts of different stuff out there.
That's really cool.
And it just really depends on what you've got going.
Yeah. Absolutely. Awesome. Is the down payment the only thing I'm going to have to pay for in that home buying process?
Absolutely not. Oh my gosh. Yeah. You hear that all the time. It's like, oh, once I get the 20 grand or 20%, I'm cool to move in. And there's all sorts of other stuff that go into a home purchase. You know, there is paying for inspectors fees.
So we, the buyer, have to do that.
More often than not.
Okay.
Yes. Now there's all this stuff about depending on what the market looks like and what the deal looks like, sometimes the seller can be convinced to pay those fees. But with the way that the market's going right now, this is definitely a seller's market, meaning that more often than not, people are really competing for different homes. And so a seller isn't really going to be incentivized to pay a bunch of extra fees.
Okay.
But know that your down payment does not cover all of the purchases or all of the all of the fees that you're going to have to be paying when you're purchasing a home. Just like anything else that's like a large purchase, there's all sorts of other stuff involved. There's taxes and insurance. There's all sorts of different things.
That's a bummer.
Yeah,
Okay.
it is what it is.
So you said something a little earlier about getting what you can get approved for versus what you can actually afford.
Yeah.
So you're telling us that a lender might actually approve us for more than what we can afford. Like, how are we supposed to figure that out?
That's something that honestly, that's what financial coaching is for. If you have
Okay.
questions about that kind of stuff, you should come talk to a professional, whether that be at Prosperity Connection or one of the other housing agencies here in the St. Louis area. But more often than not, when you get approved for a home loan, that does not mean that you can like afford to pay what that monthly payment is.
Okay.
So a mortgage officer's job isn't to say, okay, well, your debt to income ratio is this, your income is this. You could probably afford, $1,500 a month for a mortgage. Their job is to look at all what you got going on and state that based on your numbers, we can give you a loan for this much, right?
Okay.
What was the original question?
What I can get approved for versus what I can
Yeah.
actually afford. Do you have any recommendations for how I can tell the difference or how I can tell what I could actually afford?
Yeah. I mean, again, it's different for every single
Yeah.
person, right? And it's different depending on what you get approved for. But more often than not, you're going to get approved for like 200,000 or 250,000, all sorts of different stuff. You want to look at your final monthly payment, right?
Okay.
So when you get approved for a mortgage, there's going to be a breakdown of, okay, we're approving you for 250,000.
Yeah.
If we're going a 30-year loan, that monthly mortgage payment is going to be $1,950.
Okay.
Just for the mortgage. And people tend to focus just in on that number, but there's all sorts of other costs associated with
Like
owning.
utilities.
Yeah.
Okay.
Utilities or taxes and insurance on the home.
Okay.
A lot of the time that can be added in. So really when you're thinking about what you can afford versus what you're approved for, you want to look at what that monthly number is, and you want to look at your personal monthly budget of how much of my money I can afford to put towards housing.
Okay.
And if you have questions about that, come talk to a professional.
Yeah, absolutely. So I did see a question in the comments that I do want to go ahead and have us address really quickly.
Sure.
Because it was about something you just talked about, which is the FHA, first time home buyers loan. Someone asked, does FHA cover multi-family units as well, or just single family units?
Off the top of my head, I want to say that you can get an FHA loan for like a 2-family unit.
Okay.
I think that I am unsure about like a 4-family or something like that. 4 families are very common here in the St. Louis area. I want to say yes, you can get approved for that, but I'm not 100% sure. That's something that we can if we want, we can do a little research, and we can post like a comment on this live event later.
So you can respond
Yeah.
with a for sure answer later.
Yeah, but off the top of my head, you can almost definitely do a 2-person. And what's really exciting about if you were going for a multifamily unit is that when they're calculating your debt to income ratio, if you're planning on renting out that second unit, you can use that rent as income in calculating your affordability.
Oh, cool.
Does that make sense?
Yeah, I think so.
So your monthly income is $2,000, but if you purchase this 2-family flat and you're going to be charging another $1,000 in rent, a mortgage officer will look at that and say, well, actually, your monthly income is going to be $3,000 instead of your actual $2,000 because we've got that rent coming in additionally, and that can affect how much you're going to get approved for the loan. I hope that answers your question.
And like Ben said, we can come back later and post an absolutely for sure answer in response to the comment a little bit later. Before I move on to one of my other questions, another great one that came in, what professional characteristics should a home buyer look for in a potential realtor?
Oh, what a great question. Man, so there's a couple different things that stand out to me. Firstly is just like pretty much everything that you can see, that you can find online, there's all sorts of reviews for different people.
Yep.
Realtors market themselves really aggressively. That's just the way that profession works. You see people's faces on bus stops or billboards, all sorts of stuff like that. The professional characteristics that I would advocate looking for is, one, responsiveness to any kind of questions or queries that you might have when you're beginning that process. If they take a while to get back to you, they might be working with 15 other people, and the home buying process, things can change really, really quickly. So you want somebody that's really responsive. You want somebody that ideally has pretty solid reviews online if possible. The other thing is that when meeting with a realtor, you want to ask them questions like, This is how much I think I can afford. This is the type of home that I can afford. This is the area that I would like to live in. Does anything, you ask that realtor, does anything like what I just said think that we can find a house together?
Yeah.
Like, is there any standouts of, oh, well, maybe we shouldn't be looking to buy in this area, we should be looking to buy in this area? You just want to hit them with as many questions as you can. And, a true professional is going to stand out to you. If somebody said, I don't know, I got to do some research, that's okay. But always, always, always interview multiple people.
Okay, so we have a choice. Like, what if I start with someone that I think is great, and then maybe they start being unresponsive,
Yep.
or they're showing me houses that aren't what I need at all? Can I fire my realtor?
Absolutely.
Okay.
Oh my gosh. So your realtor works for you. In the home buying mortgage process, finding a home, you are the boss, right? There's really two people that are that everybody else is working for. It's the buyer and the seller. There are all sorts of other people like the mortgage officer, like the loan officer, like the realtor that are technically working for you so that the buyer and the seller can make a deal happen. So if
Okay.
you ever run into, whether it be a loan officer or a realtor that just doesn't seem to be working for you, is unprofessional, or you just like not clicking, you can absolutely find another one. You're not entered into like a life and death contract when you say, hey, can you help me buy a house?
Okay, cool.
Does that make sense?
Yes.
Okay.
That's awesome. I don't see another question in the chat quite yet, so I've got another one. You mentioned a little bit earlier, you touched on the idea that like market can affect the home buying process. So something I know that I've heard a lot and that I kind of asked myself when I was a home buyer was like, is there a right or best time to buy?
My immediate reaction to that is no.
Okay.
There's never the perfect time to
Okay.
buy. It's what really lines up for you as a potential buyer
Okay.
or a potential borrower. Is you feel like your income's really solid? Do you feel like you're outgrowing the space that you're currently in? Are you tired of having to pay rent? If the answers to those are generally yes, chances are a home purchase is a good idea.
Okay.
But again, home purchase isn't for everybody as well,
Yeah.
right?
Yep.
But there is no perfect time to buy. Everybody was obsessed, and the market was really, really crazy in the last, I would say, 18 months, especially towards like halfway into the pandemic, because the interest rates were so low. And everybody was trying to buy a house as soon as possible to lock in that interest rate. And now that interest rates are taking a turn and rising, people are, I would say, even almost as frenzied or more frenzied for home buying
Okay.
than during the pandemic, because people don't want to get stuck with an even higher interest rate.
Gotcha.
And something to really focus on is that like during the pandemic, that was like historic low interest
Yeah.
rates. That's why it was so crazy. And it's okay if you get a higher interest rate as long as you do the research and you work on what you can actually afford, right?
Okay.
And that's something to always focus on.
Okay, saw a really great question come in related to that. So rates feel like they're always in flux, right?
Yeah.
So when in the home buying process is your rate actually locked in?
I don't remember the exact time. Like when you're given a pre-approval or an approval for a loan, I believe it's in that 90 days that it's locked in. I don't know off the top of my
Yeah.
head, and I'll respond to that question as well once we do a little bit of research and have a definite answer for you. So I'm sorry.
Yeah.
But I think you get the pre-approval, then you get like 90 days to shop around.
Yes.
Right?
So if I can interject from
Yeah.
my personal experience, so I just closed on a house that we built in, we closed last March, so March of 2022, and we had 90 days
Yeah.
that the rate that we were told, okay, this is the rate that we can offer you. We had 90 days to get the entire process finished to honor that rate. Otherwise, it was not guaranteed anymore. So I do believe the 90 days is correct. But again, we will comment for sure with some answers later.
And that's different from like your pre-approval stage versus your actual approval. Like when you're applying with different mortgage officers or loan officers saying, hey, what do you think I can get? They're going to collect your information and say, we're pre-approving you for 250,000 at 7%
Yeah.
interest or something like
Okay.
that. And then once you go through the process and you find a home that you're actually going to buy, because you can get pre-approved without a home, right?
Yeah.
And then you start beginning that process, then they lock that in, and it's 90 days.
Okay, awesome. We did start a little bit late, so I think we'll go a couple minutes extra, but probably time for about like 2 more questions. So just as a reminder, pop in some questions if you've got them. I've got a couple more that I can have Ben address.
Sure.
So one of them is this payment that I'm told once I have secured my home loan, found my house, okay, this is your mortgage payment. Is that really going to be my mortgage payment for 30 years, or can it change?
I mean, so your payment to the bank is locked in for the loan. It's just like a car loan. But there's all sorts of other things that can be affected, like your taxes and insurance.
Okay.
So when you're given a mortgage payment, typically your taxes and insurance are calculated in with that, and those two things have nothing to do with your home loan.
Okay.
Right? So your home loan is a contract that you have with the bank to pay this back, pay this money that you borrowed back. The taxes and insurance are always
Whole different
variable.
beast.
Yeah, whole
Okay.
different beast. And so your monthly payment can be different all the time.
Okay.
And something else to really focus on is that it's never easier than now to like refinance different loans. So
Okay.
I don't know if everybody that's viewing knows what that really means, but essentially you take out another loan to pay off your first loan, and you take out that secondary loan because you have a more favorable interest rate, cheaper monthly payment, all sorts of different factors can go into that. So when you take out a 30-year mortgage, yes, your mortgage is the same, but all sorts of ancillary other costs that go along with it can change.
Okay, awesome. We've had 2 great questions come in.
Yeah.
So are there any differences between the home buying process for an existing home or a new construction? And you may not be familiar with that.
Yeah, I don't know off the top of my head. I think that there might be some differences with like the approval process and stuff like that, because you had a home built. Yeah, you answer that question. Sorry.
So forgive me, I may not remember this 100% clearly. So I did buy an existing home in 2013, and then my husband and I did contract a new build. I think we contracted it in 2021. No, 2020. So from what I remember, a lot of the process was very similar. I'm trying to remember. I think the main difference was for the new build, we had to do one pre-approval to show how much we could afford to even build, so that the builder knew like what budget to work within. And then once the home was done, we had to go through the pre-approval the approval process again to make sure that we could actually get the loan for the amount. So we worked with the same mortgage broker the whole process, and I don't want to get too in the weeds, but since long-term employment at the same location is a pretty important factor, I had actually just started this job when we contracted the home to be built. And so he was just very firm, like, just make sure that you stay at this job. We're going to need like this many months of payments. So he just told us some things to like be mindful of as we waited for the home to be built. So that's one of the main differences I can think of. To be fair, I was also very young when I went through the home buying process in 2013. I'm very lucky my parents were helping me a lot with it. So I don't remember a ton of the details, but that's the main difference I can think of, is that we had to go through it twice so that we knew what we could have built.
Yeah, because correct me if I'm wrong, when you have something built, you're buying the new build from.
Yes, I believe that there can be a different process. So our process was that the builder was absorbing all the costs themselves. They had taken out the loan, and then they owned the house, and then we bought it from them. I believe there is a construction process where you take out the loan from the beginning, the $400,000, $500,000, $200,000, whatever it is, and then you pay the contractors like as you go.
Gotcha.
We just went the opposite route, where the builder had to absorb all the cost up front, and then we bought the house from them.
Yeah.
If that makes sense.
And honestly, guys, like there's so many nuances to the home buying process. Like,
Truly.
given the fact that we only have like half an hour, we can't do that deep of a dive into that kind of stuff.
Yeah. I do want to make sure we get to this one question that someone submitted. It's a great question. How soon can you buy after a Chapter 7 bankruptcy?
Great question. Okay. So I personally, as a financial coach, love Chapter 7 bankruptcies. Not in that I want everybody to have one, but I think that there's this really big stigma around Chapter 7 or just bankruptcies in general, where people like think that they failed or something like that. And that's really not the case. Like if you're buried in debt that you physically like won't be able to pay off for 20 years, a Chapter 7 is a really, really great route to go. Again, I'm not a lawyer. I want to preface all of that or follow up everything I just said with the fact that I'm not. But to answer your question, so when you go into a Chapter 7 bankruptcy, you are essentially like in a 3-month process with the courts and with the lawyers, wrapping up all of your negative debt. And then that once the bankruptcy is approved, that Chapter 7 is discharged, meaning that like all the debt gets wiped out with the Chapter 7. After your discharge date, you have a 24-month period where you will not be approved for a mortgage.
Okay.
So 2 years after the discharge date. There's a difference between filing for a Chapter 7 bankruptcy and when it's finished with the discharge. 24 months after the discharge date is when you can start applying for mortgage loans. The reason being is that there's these large quasi-governmental organizations called Fannie Mae and Freddie Mac, which back a lot of mortgages. And if a lender wants to maybe sell a mortgage to those organizations, they have underwriting saying you can't have had a bankruptcy within the last 24 months. Okay. So if you go Chapter 7, once the Chapter 7 is discharged, you have 2 years of really focusing and building up your credit, making sure everything is locked down, you have income, you have savings, all of that stuff, and then you can apply. A lot of people say if I have a Chapter 7 or if I declare bankruptcy, I'll never be able to buy a home, and that is just not the case in any way.
Okay.
I don't advocate everybody to go the Chapter 7 route without talking with a lawyer first, because it's a completely insanely complicated process, and talking with a professional is very, very important.
Okay, great. We're really close, but I do want to ask one more quick question that I know that I hear a lot. So there are 30-year conventional mortgages, right? And then I've heard that there are 15-year mortgages.
Yes.
If someone can't afford the 15-year mortgage, should they take it?
That's a really good question. More often than not, a 30-year mortgage payment is going to be significantly cheaper than a 15-year mortgage payment. Like each month, that's going to be cheaper. If you feel like you can afford a 15-year mortgage payment, I would lean towards taking the 30-year and then doubling up your payments on that, because things change. 30 years is a very long time. Life happens. 30 years is a very long time. There's obviously so many other extenuating circumstances, but if you can afford it, then go the 30-year route with that lower payment and just double up your monthly payments instead of going the 15.
Great.
I could spend 2 hours talking about that. I'm not going to use your guys' times like that, but if you have questions or anything like that, please feel free to hit us up or reach out to Prosperity Connection and sign up for coaching.
Yeah, perfect. Excellent segue. So Ben busted a lot of common myths today. I hope we answered most or all of your questions. I know we've promised some follow-up, so be looking out for that in the next, probably by end of business, I'd say.
For sure.
By end of business today, we'll get some for sure firm answers about some things that we weren't 100% about. But thank you, Ben, for sharing your expertise. Like he said multiple times, you can come to Prosperity Connection for further answers, because while we busted a lot of common myths today, I'm sure there's still a lot of, well, where the heck do I even start? Or this still sounds really overwhelming, or I've got this one particular situation, like, you know, you need very, very specific advice. And that's what we're here for. So like Ben mentioned, you can come to one-on-one financial coaching. He is one of our lead financial coaches. That is a very like in-depth personalized process. We take a look at your financial goals, and we help you build a plan to achieve them. So you can reach out to us. Our website is very simply prosperityconnection.org. There's a button right at the top that says sign up here. I can pop it in the comments when we're done. You should be able to access it from our Facebook page, all sorts of ways that you can get a hold of us. Send us a DM on here and I'll get back to you. Whatever you need, please feel free to reach out to us. That is what we are here for, to help educate. And it's not just about the home buying process. June just happens to be National Homeownership Month. So we wanted to, and because we know it's a really common goal, we wanted to make sure that we address that. So thank you so much for joining us today. We appreciate it. We hope this was helpful. We will be back in 2 weeks on Wednesday, the 28th. So we talked about the home buying process today. On the 28th, we're going to be talking about all the stuff they don't tell you about home ownership. So once you actually get into the home, there's all sorts of things people don't tell you about. So we're going to talk a little bit about that on the 28th. Same time, same place. We hope to see you then. Bye, y'all.
Bye.